Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the relevant and important finance current affairs and the RBI notifications which are very important from your examination perspective. So good morning everyone, good morning and welcome to the session. In today's session we are going to discuss a very important RBI press release that is regarding the state's finances. So the Reserve Bank of India has released a report that is regarding the state finances. Okay, so we will discuss that what are the highlights of the report that has been provided by the Reserve Bank of India, and the Reserve Bank of India has also said something about the freebies that are given by the state governments. So all of this we are going to discuss in today's session. Give me a thumbs up if I am clearly audible and visible. And good morning Aditya, Neil and Maharishi. Welcome to the session everyone. So let's start with today's session. Today's session is going to be very important because it is regarding the RBI report in regards to the state finances. So that we are going to discuss. Okay. So I hope I am clearly audible and visible. So now do subscribe to the YouTube channel of EduTap if you are new to the channel, and do subscribe to the Telegram channel because in the Telegram channel you will get the PDF of the session. Okay. So in the Telegram channel you will get the PDF and the link for the Telegram channel is provided in the description box below. Okay, so let's start with the report that is State Finances, a study of budgets of 2024-25. So the budget has been released for the 2024-25. So in this State Finances report, we are going to discuss the State Finances, a study of budget of 2024-25. Okay, so let's get started. So first of all, today, that is a few days before, the Reserve Bank of India released the report State Finances, a study of budget of 2024-25. Now in this report, the theme of the report is the fiscal reforms by states. Okay, so the theme of this year's report is fiscal reforms by states. There are some reforms that have been taken by the states that we will discuss. It provides a comprehensive assessment. So the report provides a comprehensive assessment of the finances of state governments for 2024-25. And the comprehensive assessment is provided for the finances of state governments for 2024-25, for which the budgeted data has been provided. Okay, against the backdrop of actual and revised or provisional accounts of 2022-23. So for 2022-23 we have the actual data. For the 2023-24 we have the revised or provisional accounts. Okay, so we will see the data for the 2024-25, that is the budgeted data we will see. We will see the data for 2022-23, that is the actual data, and the revised or provisional data for 2023-24. So this is what we are going to see and we are going to understand this. Okay, so let's get started with the data points. First of all, the state governments contained their consolidated gross fiscal deficit. So anyone has any idea that what is gross fiscal deficit? The gross fiscal deficit, this is equal to the total expenditure minus total receipts of the government, total receipts excluding borrowing. So gross fiscal deficit or the fiscal deficit of the state governments, that is the total expenditure of the state government, is higher than the total receipts of the state government excluding the borrowing. So gross fiscal deficit, or the formula of fiscal deficit, is total expenditure minus total receipts excluding borrowing. So only borrowing is excluded to see the gross fiscal deficit. So the state governments contained their consolidated, that is the total gross fiscal deficit, has been contained within 3% of the GDP, and their revenue deficit is the revenue deficit is equal to revenue expenditure minus the revenue receipts. Okay, so I hope you know two accounts in the union budget. In the union budget there is the revenue budget and there is the capital budget. Okay, so revenue talks about the revenue budget, it talks about the revenue expenditure and the revenue receipts, that is the expenditure that is happening on the day-to-day activities, the expenditure that is happening on the salaries and the pension and subsidies, and the receipts that are coming from the taxes, from the fees, fines and dividend. Okay, so yes, there is the revenue expenditure and revenue receipts that are the general or regular receipts and the expenditure. The capital expenditure is the expenditure on the assets to develop the asset in the country, to develop the infrastructure in the country. So that is the capital expenditure. And there is capital receipts that comes from borrowing and such. Okay, so when we talk about the revenue deficit, that means the revenue expenditure is higher than the revenue receipts of the government, and revenue deficit is considered bad for the country. Why it is considered bad? Because the day-to-day activities that the government is doing, if the government is spending too much on the day-to-day activities, if the government is spending too much on its operating expenses, that means the government is taking too much money on the operating, okay, and the government is not able to focus on the capital expenditure. So the revenue deficit, that is the revenue expenditure, is more than the revenue receipts. So that is revenue deficit. So first of all, the consolidated gross fiscal deficit, that is the total expenditure minus total receipts excluding borrowing, that is contained within 3% of the GDP, and the revenue deficit at 0.2% of the GDP. So this number is somewhat good, that at least the revenue deficit is lower. Okay, during 2022-23 and 2023-24, so in both these years, the gross fiscal deficit is lesser or is within 3%, and the revenue deficit is within 0.2%. In 2024-25, the states have budgeted a gross fiscal deficit of 3.2% of the GDP. So the gross fiscal deficit, it is expected to increase to 3.2% of the GDP in 2024-25 as per the budget of the states. Yes. So that is the idea. Now the improvement in the quality of expenditure has happened. So the gross fiscal deficit is budgeted to increase to 3.2% in the 2024-25, but the improvement is happening in the quality of expenditure. See, the government can spend on the revenue expenditure, on the operating expenses, and the government can spend on its day-to-day activities, or the government can spend for the capital. The government can spend for returning the loans or for building the asset. So that is capital expenditure. So there is improvement that is coming in the government's expenditure. There is improvement in the quality of expenditure that was sustained with capital expenditure rising. So capital expenditure is increasing, that is the good news, from 2.4% of GDP in 2021-22 to 2.8% in 2023-24 and budgeted at 3.1% of GDP in 2024-25. That is, even if the gross fiscal deficit is going to increase or is going to be at 3.2% of GDP as per the budgeted data for 2024-25, it is expected that the expenditure, the capital expenditure is going to increase from 2.4% to 3.1%, from 2.4% in 2021-22 to 3.1% in 2024-25. Okay, so slowly and slowly, as you can see that the governments are increasing their capital expenditure also from 2.4% to 2.8% to 3.1%. So this is the budgeted data. This is not the actual one, this is the budgeted data as per the budget. Okay, so there is the improvement in the quality of expenditure as the government is focusing more on the capital expenditure. Okay. So now, fiscal position of the state governments. The fiscal position of the state governments. So this was a chapter in the report, and the state governments contained their consolidated gross fiscal deficit within 3% of the GDP during 2021 and 22 to 2023-24. So the gross fiscal deficit has been within 3% of the range and maintained the revenue deficit at 0.2% of the GDP. Persistently higher debt has been seen. So persistently there is the higher debt that has been seen for the state governments. That is a problematic situation. So let's see this, that there is the higher debt levels as well as the total outstanding liabilities. So total liabilities, total outstanding, that means current liabilities for the state government declined from 31% of GDP at end March 2021 to 28.5% of the GDP. So you can understand that the total outstanding or the total standing liabilities of the state governments have declined from 31% to 28.5% at the end March 2024, but still it is higher than the pre-pandemic level of 25.3% at the end March of 2019. So the decline is happening in the outstanding liabilities, but it is still higher than the pre-pandemic level. So the state governments have to take action to decrease its liabilities even further. So I hope this is clear till now. Now, state-specific fiscal responsibility legislations along with tax and expenditure reforms. So fiscal responsibility legislations, they are prepared in India, they are prepared for the state governments. So fiscal responsibility legislation, they are a kind of law or regulations you can understand. So they are the fiscal responsibility regulations or the fiscal responsibility legislations in India for the state governments. It helps to ensure prudent fiscal management. So fiscal responsibility legislation, it provides some basic idea to the government that what are the prudent fiscal management, how the government can have the prudent fiscal management, how they can manage their revenue and the expenditure in a prudent manner. So fiscal responsibility legislations are for the state governments that helps to ensure prudent fiscal management and improve the efficiency and transparency of the state finances. Like there is the FRBM, that is the fiscal responsibility and budget management, that the central government should have the fiscal responsibility, should have the responsibility in the expenditure and the revenue that it is collected. The expenditure should not be too much on the operating causes or for the operating purposes. There should not be too much expenditure that should be happening. The fiscal deficit should be limited to a level. The revenue deficit should be limited to a level. So there is fiscal responsibility, and the budget management of the government should also be prudent. Similarly, like the FRBM is for the central government, there is the fiscal responsibility legislation that is for the state government, that provides some legislation for the prudent fiscal management and efficient and the transparent state finances to be managed. Okay, so state specific fiscal responsibility legislations along with tax and expenditure reforms have strengthened their finances over the past 2 decades, but still there are some problems that we will see. Okay, so this is the idea. Now the problem is in view of high debt levels. So the state governments have high debt levels, contingent liabilities. See, the state governments give guarantees on the regards or on behalf of their companies, okay, on behalf of their companies, public sector undertakings or the companies that are under the state government. So the state governments give guarantees for them. When let's say some company is taking loan, that is, this company is under the state government, So if the company is taking loan, the state government can give the guarantee so that the loan can be given to the company at a lesser rate of interest, and the banks can show more trust to the company because the state government is backing the company or is the guarantor for the company. So state governments give guarantees for the different companies. So it becomes the contingent liability of the state government that if the company is not able to return the loan, the state government, that is the guarantor, will have to give the money, will have to return the loan. So the state government has high debt level, as well as there is also the contingent liability that can come in the future if the companies fail to repay the loan. And the rising subsidy burden. So subsidy burden is also rising very fast as the state governments are giving different subsidies, they are giving different waivers that the state governments are not able to handle in the long run. Okay, so now state government finances would benefit from. So it is said that in view of the high debt level, contingent liability and the rising subsidy burden, the state government's finances would benefit from the adoption of risk-based fiscal framework, that the state governments have to consider the risk of having too much of the expenditure or having too much of the deficit. So the state government should adopt the risk-based fiscal framework where the government is considering the risk of overshooting their expenditure, okay, with provisions for counter-cyclical fiscal policy actions. Now when COVID happened, can we say that the state government should spend less during this time period because the state government are having deficit? So should the state government spend less? We will discuss about that, Manish. But before that, during the COVID, can we say that the state government should have spent less? Yes or no? See, if the state government are spending less, that means they will not be able to provide the health facilities to the people. They would not have been able to provide the different facilities to the people. So during the COVID, the central government and the state governments had to spend more so that they can provide the ration to the peoples, so that they can provide the health facilities to the people, so that they can provide the basic necessities to the people. So there are counter-cyclical fiscal policy. That means if a certain scenario is coming, if the contraction is coming in the economy, if the demand, if the production is reducing in the economy, in this case the government has to increase its expenditure so that the demand can increase, so that the production can increase and the economic activities can increase. Okay, so there are if the contraction is coming, if the cycle is going towards contraction, if the contraction is happening in the economy, or if there is any epidemic or pandemic that comes in the economy, the government has to spend more for its operations, for the subsidies and such. So the adoption should happen of a risk-based fiscal framework with provisions that should be provided for the counter-cyclical fiscal policy action. The government has to take into account that if the contraction happens, the government will spend more, but that should not affect the long-term policies of the government, or that should not affect the government in the long term, and that should not affect the budget of the government in the long term. I hope this is very much clear. No, this is something else. Basically, the idea is that the government should adopt the risk-based fiscal framework. The government has to consider the risk of overshooting the expenditure, but the government should also have the provisions for the counter-cyclical fiscal policy. If the contraction is coming, the government will spend more, right? Now, a prudent medium-term expenditure framework. So, for a medium term, like 3 to 5 years, for that time period, the state government should have a prudent medium-term expenditure framework, that in this time period where the government wants to spend and how much the government want to spend and why the government want to spend in these areas. Okay, so there should be a prudent medium-term expenditure framework so that the government is not overshooting its expenditure. A clear, transparent and time-bound glide path for debt consolidation. So debt consolidation means, let's say I have taken 5 debt. So let's say I have taken 5 debt, 10 crores, 100 crores, 20 crores, 30 crores and 50 crores. Okay, so I have taken this 5 debt that is having the different interest rate, 5%, 8%, 10%, so and so. So rather than having so many of the different debts, I can consolidate this. I can take a big debt of 200 crores at an interest rate of 4%, let's say. So debt consolidation means that the state government should think of giving back the money of the smaller loans by taking a large loan at a lesser and good terms and condition, because the smaller loans, they are at a higher percentage. So smaller loans, they are actually at a higher percentage. So the state governments can return those smaller loans or return the earlier loans and take a big loan at a lesser percentage at a good terms and condition. Okay, so that is debt consolidation. So the state government should have a clear, transparent and time-bound glide path for debt consolidation, so that the state government is returning its earlier loans by paying some of the loan from its own pockets, and the other part of the loan can be paid back by taking another big loan. So that should happen in a clear, transparent, time-bound manner, so that the state governments are not taking too much of the loan for its personal expenses, for its operating expenses. Okay, so debt consolidation should happen in a transparent manner, not something like that you are taking a big loan just to spend it for yourself or for making your parliament more bigger and something like this. That should not happen. No, it is not evergreening of loan. They are returning the earlier loan and they are taking the new loan just to return the earlier loan, so that they can have better terms and conditions. Okay, and state government should do it in a transparent manner. Enhance data dissemination and communication policies. So the data has to be communicated to the public, so that the public is aware about the different data about the unemployment, poverty and such, including on reporting of outstanding liabilities that the government has, so that the public can criticize the particular government on having too much of the liability. Okay, so the government should have a transparent mechanism of data dissemination also. Off budget borrowings, that how much borrowing has happened off budget, that is how much extra borrowings has been done and how many of the guarantees have been given by the state government, because the state governments tend to give too many of the guarantees. Okay, so all of this data has to be provided in a very transparent manner. Now another point, so I hope these points are clear. So these are the points that I hope are clear. Debt consolidation is just a means so that the state governments are not having too many of the different loans at the different terms and condition at different rates. So rather than having too many of the loans, a big loan the state government can have at a lesser interest rate at good terms and condition, but this should happen in a transparent manner. Okay, Aditya. So strengthening of state finance commissions is also critical. So the state finance commission, like there are the finance commission that provide the idea for the division of taxes between the central government and state government. There are the state finance commission that provides for the provision for the division of tax between the state governments and local governments. Okay, so state Finance Commission is a constitutional body in India that recommends how to distribute the financial resources between the state government and its local bodies. Okay, so this is the idea that the strengthening of State Finance Commission should happen. That is also critical for ensuring adequate and timely fund transfer to the local bodies. So State Finance Commission should be constituted in a timely manner so that the division of taxes between the state and the local bodies is happening in a timely manner. Otherwise, the state governments can take away the money and give the money not in so timely manner. Okay, so that should not be happening. The state government should transfer the money or should transfer the resources in a timely manner. So for that, there should be the constitution of State Finance Commission and the working of this State Finance Commission that should happen in a efficient manner. So the State Finance Commission also recommends measures to improve the state finances as well as forecast the state revenue and expenditure also. So we have to strengthen, or the state governments have to strengthen the state finance commissions. That is also critical for ensuring the adequate and timely transfer of funds to the local bodies. Okay, so this is the idea. Now the next one is the publication has been prepared. Now this report, we have discussed the highlights of the report that was given by the Reserve Bank of India. So RBI has released the report and has given the highlights also. So this all we have discussed. So the publication has been prepared in the Division of State Finances in the Department of Economic and Policy Research. So the Department of Economic and Policy Research, that is your DEPR department, that prepares this report. And in this department also there is the Division of State Finances that has prepared this publication. Okay, so this is the idea. Now a Reserve Bank report on Thursday sounded a note of caution saying SOPs or the SOPs like farm, loan waiver, free power and transport by the states, they are problematic. Basically, SOPs is a thing of no great value given or done as a concession or to appease someone whose main concerns or demands are not being met. SOPs, this is the meaning of SOPs. This is the meaning of SOPs, that just to appease a particular community because the elections are coming or because the elections will come, so because to appease or to benefit a particular group, just for the short term you are giving them the farm loan waivers or you are giving them the waivers, that is not going to help them in the long term, because again if the crop is getting destroyed, or again in the next tenure also the farmer will again need the loans. So again he will be in the same situation that he is under the debt. So in these kind of situations, when there is the debt burden and you are just waiving off the loans for now, again the same problem is going to come. So just treat the root cause of the problem, give the farmers the tools that they require, give the farmers the proper policies that they require, give the farmers the tractor or the machinery that they require, and instead of giving the free electricity, you can give the solar power plants to the farmers so that they can generate the electricity by themselves, and the electricity is not going to go to waste also. Okay, so the Reserve Bank has sounded a note of caution saying that SOPs that are to appease someone, or they are the concessions that are given that are just short-term concessions, that are just short-term appeasement, is not going to cater to their demands. They are not treating the root cause. So like the farm loan waiver, as I've told you, right now you are giving the waiver, again the farmer will be in the same situation or in the same problem. Rather than teach them about the insurances, teach them or make them more aware about the different crops that they can grow. Okay, so give that power to them rather than waiving the loan. Free power and transportation, so free power, rather than giving free power, solar power plants can be given so that the farmers are able to generate their own electricity, or even they can sell the extra electricity that they are generating, so that the electricity is also not going to waste, because any free thing will be utilized without caution, and that is bad. Free transportation by states could crowd out their critical resources. If the state governments are giving these free resources, it can reduce the resources for social and economic infrastructure or for the social and economic development. Rather than giving the farmers the awareness and rather than spreading awareness, you are giving them loan waiver. So that can create a little problem. Okay. The RBI State Finances, a study of budget of 2024-25, however, said that the state governments have made commendable progress also, that their fiscal deficit has been within a limit and the revenue deficit has also been around 0.2% only. But the RBI report has further said that several states have announced SOPs pertaining to farm loan waiver, free electricity to agriculture and households, so that can lead to the wastage of electricity. That should not be happening because we have the limited resources. Free transport allowances to the unemployed youth and monetary assistance to women. So some schemes that is giving free money, that should not be happening, because rather than making them capable, rather than improving their skills, you are just giving something for free that can be misused in a greater manner and crowd out your money. Okay, so these kind of crowding out is happening to the resources, and the state governments are going into the deficit kind of situation. Okay, so this is the idea. I hope it is clear. Now I hope you will be able to answer this first question. This is the first question. Now before going forward, let me show you that if you go to edutap.in, you can go to the EduTap's website, and if you go to free material, the blog section, you can read the blogs that have been prepared by the team for the different examination, so that you can know about the examination. So exam information and the strategy, the success stories, it has been provided to you. You can see the exam information for the different exam that you want to prepare for. So you can see the exam information, you can see the strategy for the examination. You can even see the success stories, that how the toppers have achieved their dream, how the toppers have become the officers. Okay, so you can read the stories and you can read the strategies of the different aspirants. Okay, now if you want to see the courses also, in the website there is the courses section where you can see the courses, that what all you are getting and what will be provided to you, who will be teaching. So all of that you can see here. Okay, so this is it. So I hope you will be able to answer this question. This is the first question that I hope you will be able to answer. You have to tell the correct statements, okay, in this question. Now the second question is regarding this. So this is the second question. So this is a direct question. You have to tell that the total outstanding liabilities have decreased from 31% to what percentage. So this is the second question. So this is it for today. Thank you very much for joining the session. If anyone has any confusion, they can ask. Any confusion, anyone? All clear? So this is it. I have provided you the highlights of the report, and this is it for today. Thank you everyone. Thank you for joining, and let's meet in the next session. And Merry Christmas to everyone that celebrates Christmas. So Merry Christmas to all of you. And you're most welcome, Manish. Thank you for attending the session, everyone. You're most welcome, Aditya. So if you have any question or any query, you can comment down below also. So do write in the comment section if you have any confusion.